Well, let's take a look at the housing market. It isn't showing many signs of cooling, even as mortgage rates hit a 22-year high. The Case-Shiller Index showed housing prices continued to rise in June. The national composite up almost 1% month over month and seeing no change compared to last year. Now, prices have held strong thanks to low existing home inventory. That's been a boon for home builders. Looking at home builder stocks, they're all up over 20% year to date. Luxury builder Toll Brothers said in its latest report that the average price per home in its backlog is $1.75 million. Now that's up from $1.43 million last year. Joining us now is Heidi Patalano, National Mortgage News Editor-in-Chief. So good to see you here, Heidi. We still have this very tight housing market here. Good news for home builders, though, but when do some of these home buyers get a break?
Right, that's a very good question. It seems like there is really no relief in sight for home buyers looking for some price breaks. Definitely, there's an inventory crunch right now, and that is keeping prices high despite the fact that mortgage rates are still inching up. We saw last week that mortgage rates hit 7.23%, the 30-year fixed average, which is just a high not seen in 22 years. And with Federal Reserve Chair Jerome Powell signaling last week that he's open to continuing to raise the federal funds rate, we can expect that rates will stay up that high. But as I'm saying, otherwise, those homeowners who would otherwise list now are not incentivized to do so because the rates are so high, which keeps supply so tight and prices up.
So I was doing a little TI-84 calculator here just before the show, looking at one of the recent reports that came out from a new home builder and Toll Brothers last week, just looking at the year-over-year increase that they're seeing in the backlog of homes that they're still delivering right now, and it came out to about 3.5%. A lot of buyers might look at that and say, okay, well, that is kind of pairing with year-over-year inflation as of right now. But where is it different for some of the home builders and the new home market when it comes to the delivery and that timeline for delivery, especially given that this is one of the more expensive home builders out there? And what does that spell out about the broader housing market, too? If you have a company in Toll Brothers saying that, all right, we still need time to be able to deliver on all of these homes, and we've got significant backlog, and then at the same time we need to write down where there is inventory that is unsold as well.
Yeah, well, it's an interesting question because, we saw that new home sales hit a high last week. And so but yet home builder sentiment is down slightly because the rates, because of the interest rates scaring off some buyers. So we're seeing some of them offer incentives to get people into those homes. They're offering breaks in the customization of the homes that they're going to deliver and in closing costs. So it's an interesting situation because there is that high demand. There may be a backlog that they're still catching up to, but there are certainly buyers for those homes out there.
So Heidi, as we look regionally then, and people are trying to decide, is it better to sort of get an existing home or try and wait for one of these new builds, considering, sometimes the cost can kind of add on as you go in with a new build. How should people be looking at how to decide whether to buy a new build versus some of the limited existing home inventory?
Well, I think it really depends on which market you're in. One thing we're seeing about the home price trends is that they're really varying quite a bit from market to market regionally. So we saw prices go up in certain parts of the country, in the Northeast, for example, but yet in markets like Seattle and San Francisco, we saw prices go down. And also that new home inventory isn't coming up evenly across the market. So, I think it really depends on where you're at. The other thing that's an interesting part of this is that rental prices for single-family homes have sort of slowed in terms of their growth. And so right now, that is seeming like an attractive option in terms of staying in a rental and waiting it out for interest rates to come down.